tough name to pronounce. Ross Komarinetz, thank you so much for joining today. We are going to talk about like super exciting topics. Insurance.
Yeah. Well, thank you for having me. Yeah, it's always so much fun to talk about insurance. It's so interesting and very sexy.
Yeah, it is not a super fun topic to talk about, but today we're going to just break down Governor DeSantis signed into law SB 2A and 4A. We're going to be talking more about the 2A today, just breaking it down and what it means for Florida homeowners and our clients that we work on together. And first off, Ross, you are the agency owner for Brightway Insurance Juno Beach, and been there for 12 years. I've been working with you a long time.
Yeah, probably for about 9 or 10 of those 12 years.
Yeah. So for a long time. So I appreciate the relationship that we have together and all the great things you've done for our clients. And you have the a super easy last name to pronounce, so the clients always love that. Komarinetz. I was reminded today again. But thanks again for joining me today.
Thank you for having me.
Cool. So let's break down this bill that was just signed into law by Governor DeSantis. This was Senate Bill 2A. Now let's back up a little bit, because back in May, DeSantis signed another bill, which was, I think, 2D and 4D. So let's talk about that one first, and then maybe what that one meant, and then let's kind of roll into the new bill that was just signed.
Yeah. Back in May, they had that special legislative session that I think the two biggest takeaways from it were they created a reinsurance program for insurers to take advantage of, because one of the things that has gotten out of whack is the cost of reinsurance. And for people who don't know what reinsurance is insurance that your insurance company buys to lay off some of their risk for large catastrophes, large claims situations, and things like that. And over the past couple of years, just the reinsurance business is a global business. So even though we're here in Florida, we're affected by catastrophes around the world. As there's a lot more catastrophes, that reinsurance money is doled out or spent to reimburse the insurance for the costs of those. So we've had a lot more global catastrophes. So there's less money, and that money has become more expensive. And then, of course, here in Florida, we've got hurricanes, and everybody knows, or I think in what Senate Bill 2A took care of was, a lot of the lawsuits and things like that. So a lot of reinsurers offering that type of coverage to our local insurance companies, they were not, jumping at the bit to offer that reinsurance to the Florida carriers, just with our whole environment down here. So less money available became more expensive as we're all chasing that same money.
So they passed this bill back in May, but it really didn't make much of an effect. They created a reinsurance fund, but I remember even talking to you after that, there was like more and more insurance companies just dropping out of the state of Florida saying we're not even writing, or they're making the guidelines like so tight that, like we were just talking, like you have an insurance carrier that won't even write a policy unless the house is, if it's more than 1 year old, like new construction, they won't even write.
Yeah.
So basically that reinsurance, did that help at the end of the day? Or
No, not really. Just because in order to take advantage of it, you had to file for a rate decrease, and I didn't really see anybody doing that.
Right.
And, even since then, we've had 2 companies go out of business. So
one of the cool things in that bill that was passed that was kind of interesting was that whole, what's it called? The MySafe, it's called MySafe Florida Homes Program, which was basically a program where it would allow you to get basically a free wind mitigation inspection.
Well, what it did is a wind mitigation report is an inspection that is done for insurance purposes specifically, and it allows you to qualify for discounts on the wind portion of your premium. So depending on that inspection, it indicates, how well your roof should hold up, or your home in general should hold up in, high windstorms. Yep. And so, that takes into account everybody's heard about hurricane strapping, things like that. So it takes that into account. And the other major thing that it takes into account is opening protection, either hurricane shutters or impact glass. And so that created a fund for Florida homeowners to upgrade their home to basically have a better wind mitigation report and qualify for as many credits as they can.
Yeah, it's kind of interesting. I mean, I think in our area, there's not going to be a lot of people because there are some restrictions to it. But I mean, it sounds like it says all owners of site-built single-family residential homes would be eligible to make application for a wind mitigation home inspection, which, like you said, just basically it's going to cover like your roof, how the roof is constructed, like if it has traps or triple nails or whatever the case is, the openings. And then from that, you can determine what upgrades that you need to make in order to get lower insurance or to make it a safer home. Moving on from that, it states if your home insured is less than $500,000, and you have a homestead exemption, and you're in the windborne debris region of the state, which we are down here. And the initial building construction permit for the home was issued prior to January 1st, 2008. Then basically what they can do is provide like grant money to help you upgrade the home. You have to put in at least $5K yourself, and it's like 2 to 1. So if you put in $5K, you could potentially get a grant for $10K. So obviously that probably wouldn't be for like a third nail for the roof or straps, but more like hurricane windows or hurricane shutters or something like that.
Yeah, I mean, if you if you don't have the third nail, which is, we see it every once in a while nowadays. We used to see it quite a bit more often. But, if you don't have a third nail, and then also if you don't have opening protection by way of shutters or impact glass, it can encompass all of that.
Yeah, it's pretty cool. So again, your insurable value has to be less or $500,000 or less. And I believe the website is just My Florida Homes, either .gov or .com, but you just go ahead and Google it. It's a state of Florida program.
Yeah.
It's kind of interesting. So that was really May. Mm-hmm. So May provided some reinsurance that really didn't work too much, and then it provided this program.
One other thing in May too is they, if you're an insurer can't cancel you if your roof is more than 15 years old, as long as you can show the insurance company that there's at least 5 years of useful life left. So nice. That was kind of a big deal as well.
Yep. Yeah, because that's really the big thing. It's so funny. It's like the roofers sell you a roof and they said, "Hey, listen, this is a tile roof, and it's it's 40-year tile." But like after 20 years, the insurance companies are basically jacking up your insurance so high they want you to replace the roof
or canceling you,
or canceling you completely.
Yeah.
Yep. Also in May, they did pass that 4D, which was basically just more for the condo market, which was pretty interesting. I thought there was a lot of cool things in there. Most importantly, there was that it's going to require that reserve study to be done by the condos by the end of 2024. And it's going to require those inspections. So if you're within 3 miles of the coast, and I believe if the building is over 25 years old, you have to get these recertification or re-engineered inspections. And you have to have a reserve study so the condos are properly budgeting to keep their buildings up to code, so another disaster doesn't happen like we saw a couple years ago.
Right. I mean, the unfortunate part of that is you'll probably see maintenance fees go up.
Oh, yeah.
You'll see the insurance premiums go up only just because they're really looking to make sure that those buildings are insured properly as well. Because I've seen in a couple condo buildings where the building might have been insured for $1 million, leading up till today, but the new insurance policy wants to insure it for, we'll say, $2 million. So that's going to increase the cost of it. All those studies, things like that, those are just going to be, rolled into the maintenance fee that everybody in the community has to pay. So even though hopefully the building won't fall down, everybody's going to probably pay a little bit more money in their fees.
100%. So this is a state of Florida issue. I mean, we see it on the lending side because we have to do a condo review and we have to get the budget and the balance sheet of the condo. If the condo is not budgeting 10% of their total income towards a reserve fund, then the client cannot do low down payment financing. They have to do 25% on a primary residence or 30% on a second home.
Wow.
Or
25%.
Or investment property.
Wow.
Yep. So, yeah, so the things there are going to be, one is HOA fees could go up. Things to watch out for right now would be if there is a pending special assessment, make sure you find out what that is for. Like if you're looking at buying in a building and maybe there's a pending special assessment, really dig in and find out what that is for. If it's something small, great. But if it's for like the re-engineering of the building and structural maintenance, then you might want to take a step back. Also, you might not even be able to finance if that's the case until those are done. So yeah, there's a lot of changes in condos. I don't want to get too in the weeds on those, but I'm happy to see these reforms going through and to at least put some standardized processes in place for the condo boards to abide by. Because I mean, that's the last thing you want is like these condos that are just not keeping up with the building, and then you're having more of these condos either breaking down or collapsing or people getting hurt, most importantly. Yeah. So let's dive into Senate Bill 2A, which they were calling one of the most significant pieces of legislation to be passed in the state of Florida for insurance. So let's break that down a little bit. And what does it mean for homeowners?
Well, I don't know if we'll see anything, reflected in homeowners' premiums. And I think that's what most people are concerned about is their insurance premium. I don't think we'll see anything reflected in that for at least 1.5 to 2 years. As far as this bill goes, I think the two biggest things are going to be we're not going to have those one-way attorney fees anymore, where you can just hire an attorney to sue your insurance company, and you just, hopefully you get something. If you don't, it's no cost to you.
So let's talk about that. So basically what was going on, and there's a guy in my neighborhood doing this. He was literally going to like every single house that had an original roof, and these are barrel tile roofs. So and most of the homes in there are like 20 to 25 years old. And he would go to every single house, knock on the door. He was a roofer, and basically say, listen, I can do a free inspection on the roof. I can probably find something wrong with it from the hurricane that we had 1.5 years ago, which nothing really happened. I think we maybe had one palm thrown down on the ground, and that's about it. But he's like, listen, I can find something wrong with the roof. And then what I'll do is you can do an assignment of benefits. I will file the claim with my attorneys. We'll get the insurance company to pay this crazy number. And so one of my neighbors actually went and did it. And I was like, I was just curious. I'm like, cool. So how much was the claim for? She's like, $120,000. I'm like, $120,000 for a roof? I go, I just got a quote on my roof. It was like $40,000 or something like that. So it just goes to show you these guys are going around trying to find something wrong with the roof, overinflating the claim, getting this huge payout, of course, replacing the roof. And the homeowner loved it because they're like, I basically got a free roof.
I just signed a piece of paper and got a free roof.
Right.
That's all it was.
So the homeowners loved it. These guys were just making tons of money. And if the insurance company wouldn't pay, then they would have their attorney sue the insurance company. And then I believe the insurance company, once they win, they have to pay all the attorney's fees.
Yeah.
So that was the previous landscape. So it incentivized all these people all these like contractors to go out and create these overinflated claims, which in turn pushed all premiums up for the whole state of Florida.
So here's 3 interesting things. One, last night, I'm flipping through the TV on ESPN. There's a bowl game down in Boca. The roofclaims.com bowl game.
No way.
That's a lot of money to sponsor a bowl game, right? So, there's a lot of money there. 2, I think it was 2019 or 2020. There was, $15 billion that was paid out in claims that resulted in a lawsuit. Now, how much of that $15 billion do you think actually went to pay the property damage, to fix the property? How much?
Half?
8%. 71% paid plaintiffs' attorneys' fees.
Jeez.
So the attorneys and roofers are making all the money here at the insurance company's expense.
Right.
In the United States, Florida accounts for 8% of all claims filed, property damage claims. Florida accounts for 80% of claims that result in a lawsuit. And that's because of those one-way attorney fees. Because, the attorneys can just, say, hey, we'll handle it. We'll throw it at the wall. If we get money, we get money. And if we don't, the next one will get paid on. So we can afford to lose 2 or 3 if we get paid on one.
Right.
So that's one of the, I think that is the biggest thing that this bill takes care of.
So now that's gone. So you can't assign your benefits. So the homeowner has to make the claim themselves, right?
Mm-hmm. And handle it. And then as far as the attorney's fees, what changed there? So right now, if I sue my insurance company because they denied my claim, and they give me $1 more, the judge awards me $1 more than I win $1. Now the insurance company has to pay the insurance company that I was suing has to pay my attorney's fees.
Gotcha.
So, I could see if it was 1 or 2 carriers that this was affecting, but it's across the board, so it's not like every single company is saying, or, we're not paying claims. That just, it's something that is affecting the entire insurance industry. So it can't be the entire insurance industry just has decided, oh, we're not going to pay claims. So I think it's a lot of these, roofclaim.com, that's who's getting paid.
So now you have to pay your own attorney's fees. You have to hire an attorney. If you want to sue them, you hire your own attorney.
Or if you do sue the insurance company and let's say they give you, okay, we'll give you $15,000 for your roof. Now you have to give a portion of that to your attorney as far as the attorney's fees.
Gotcha. So it's really going to stop some of the frivolous lawsuits.
Hopefully.
And then it also, here, let me get to some of my notes here. It also did a little bit more with reinsurance as well, I believe, right?
Yeah, it did. Created another taxpayer-funded reinsurance program that, they're hoping it's going to be the little bit cheaper to purchase rather than getting it in the private market, which should provide a little bit of relief to premiums. Again, I don't think we'll see anything for 1.5 to 2 years.
Yeah.
As all the kind of financial, data is gathered and shakes out, and they figure, okay, here's how much money we actually saved by this, that we've put in our coffers. So our reserves are built up, and then now we can start to reduce rates.
So it's going to take time for really this to work through the private markets, for these insurance companies to just look at it and be like, okay, we're not paying all these attorney's fees now. We're having more profitability in the state. There's more protection. So now we can start lowering premiums, hopefully, or maybe new insurance companies coming into
Exactly.
the state.
We need some new players too. Like 4 years ago, on an average home here in Palm Beach County, I could probably get quotes from 15 to 20 carriers. Now, on the average home, depending on the age of the roof, I might get 3 or 4. And the problem is the other 3 or 4 besides Citizens are crazy expensive.
Right.
They're charging for it, and the Citizens rates are kind of subsidized because they have caps on how much they're allowed to increase their rates year over year. And one of the things in 2A is too, they want Citizens to become, the insurer of last resort again. They don't want them to be the cheapest thing available right now.
So side note on that. So if somebody's out there looking at properties, they're active in the market. They're out looking at homes. They're looking at making offers. Like for a shingled roof, like what is the rule of thumb if you want to get like a decent middle of the road insurance policy for the age of the roof?
You're going to get more carriers offering you coverage if your shingle roof is 10 years old or less,
10 years
or younger
or newer. Okay. And for Citizens, they'll go on a shingle. They'll go up to
whatever, as long as it has 3 years of useful life left.
So the 4-point inspection or the wind mitigation would have to state how many.
So the wind mitigation report is strictly for discounts. On the 4-point inspection, that's where you're going to find out the years of useful life left.
The inspector will put on there how many years. So you have to have at least 3 years on that.
With Citizens,
Gotcha. Okay. So 10 years is the is really the number you'd want to shoot for on a shingle.
Yeah,
currently.
but I mean, if that house is over 40 years old and it has a 10-year, the roof is 10 years or younger,
Yep.
you're probably still going Citizens anyway.
I mean, most shingles, like if it's a good shingle, it's usually a 25 to 30 year shingle. But
yeah, I mean, that's what the roofer
don't think
tells you.
that way.
Yeah. Yeah. And two, the thing too is with assignment of benefits and the one-way attorney's fees is it's not only roofs, but it's also like water damage claims. Because right now, if your home, even on a new home, I have the carrier that kind of comes back the best. If it's a newer home, like a 2005 or something like that, with an original roof, the policy is probably only going to be bound with $10,000 of water damage coverage. You can request full water damage coverage, and there's a hefty premium for it, but it's only going to come with limited water. And that's because of that assignment of benefits and the one-way attorney's fees. So that's another area. Hopefully we'll be able to see full water damage coverage on more and more policies.
So water damage could be either a leak from a roof or a broken pipe, something like that.
Yeah, mostly a broken pipe or something, because what was happening is people might have a kitchen sink leak, or maybe their dishwasher became loose, or the refrigerator line, started leaking when they weren't there. A hot water heater exploded.
Next thing you know, they're remodeling a $100,000 kitchen.
That's right. All they needed was, maybe some new floors because the floors got ruined, but now they got a brand new kitchen.
Right. Yep. There's always the people that take advantage in situations like that. And for a tile roof, so what's the rule of thumb on a tile roof if you're going out looking at properties?
I got carriers that will do it up to 20 years. Still a lot of them are at 15,
So north of 20, you're going Citizens, pretty much.
Oh, absolutely. Absolutely. Yeah.
And a lot of times north of 15. I mean, that's crazy.
Yeah. Yeah. I mean, it's a strange environment to, it's a difficult conversation to have with somebody to say, hey, due to the age of your roof, I don't have any other carriers offering coverage. And it's like, my roof is 15 years old.
Yeah.
And it's,
Now, on the Citizens topic, what is the issue with Citizens? Like, why wouldn't you want Citizens? I know one of the things that I know is, like, because I have a property that I have Citizens on, and the max liability coverage is $100,000, which is just not enough.
No.
So you have to either get an umbrella or additional policy on top of it if you want more liability coverage. But are there any other drawbacks to having a Citizens policy?
The thing with Citizens is you can't really customize it. If you want to increase your mold coverage, because mold's a big deal down here in South Florida. It's humid, it's hot, mold can grow pretty quickly. Citizens is only going to give you $10,000 for mold coverage. Most companies and any other company that we write with, we always increase that mold coverage to at least $25,000. With Citizens, you only get $10,000. There's other endorsements that we find to be important that we add with private carriers that just aren't available with Citizens.
Gotcha.
And so it's kind of, you get what you get.
Yep.
That's it.
Gotcha.
There's no customization.
All right. So other things in the bill was the claims filing deadline reduces the claims filing deadline from 2 years to 1 year of the data loss for new and reopened claims, and then 18 months for supplemental claims. So what does that mean?
So it used to have 3 years to file a hurricane claim.
So hurricane 3 years ago, you could bid.
It was 2. It was 2. I think 2 years. Sorry. If you don't know after like a couple months,
right?
That
damage was from 2 years ago.
Yeah.
Like you really knew that.
Yeah. And that's what a lot of, like you said, that roofer that was canvassing your neighborhood, that's what they're saying. So that it's reduced that. So get those claims filed quicker. And that, one thing that not only will probably reduce fraudulent claims, it allows the insurance company to, okay, here's how much we spent, as opposed to like, if you have a disaster 2 years ago, you're waiting a long time for all those claims to have shaken out, so it'll allow them to adjust their rates accordingly a little bit quicker.
And it looks like they also adjusted a lot of the other timelines as well. So reducing time for an insured to begin an investigation from 14 to 7 days, which is good. Mm-hmm. Physical examination from 45 days to 30 days. Reducing the time the insurer has to make a determination of coverage from 90 to 60. So it's kind of speeding up.
Yeah, it's basically saying, hey, if you file a claim, the insurance company has to handle it promptly. Because before it could drag on and drag on and drag on. But now it's, hey, if there's a claim filed, you got to handle it now.
Yep. So all that's good. attorney fees, we talked about it, repeals the one-way attorney fees statutes for litigated property. There's also some other legal reforms for addressing abusive litigation tactics. Assignment of benefits is gone. We discussed that. Let's get into the citizens reforms. So what are some of the major citizens reforms?
One of the things that they want to do is they want to make citizens more in line with the private market and charge actuarially sound rates. Right now, there's a glide path on increasing citizens' rate increase cap. It used to be capped at 10%, meaning the rates couldn't go up more than 10% per year. Mm-hmm. What they've done is over the last year, I can't remember when it was, but they said, okay, we're going to start to increase that cap by 1% each year, and I believe it caps out in 2026, I think. So this year it'll be a 12% cap on how much they can increase rates. Next year it's 13. Next year after that it's 14, and then in 2026 it's 15% rate cap. So they want to kind of do away with that and make it more actuarially sound. One of the things that they did was for non-primary residences, there's going to be a increase in rates for those. Now, that doesn't really affect, when people hear that, they go, okay, well, I'm in a rental, so that's not a primary residence for the owner, so his insurance rates are going to go up, and that my rent's going to go up.
Right.
But one thing they did is they said if it's a primary residence for your tenant, that's not affected.
Interesting. So if it's an Airbnb, they're jacking it up.
Yes. If it's an Airbnb or
if you have a long-term tenant in there.
If you have a long-term tenant that's their primary residence, then it's considered just like it's the owner's primary residence as far as the rate goes.
So how do they know that?
That I don't know yet. That's going to be, all the figuring out or the framework of it. I think that's what's going to take effect now over the next year.
Yeah, it'd be interesting to see how they're going to, how they would monitor that. It's kind of interesting.
Well, technically with citizens, they don't do short-term rentals anyway. So they'll do like a 3-month rental, and they won't allow you to rent it more than 3 times per year or less than 30 days. Mm-hmm. So some of those will be affected, but as long as it's a long-term primary residence for your tenant, then that shouldn't be affected.
So let's sidebar on that real quick. So let's just say there's somebody who has an Airbnb and they have citizens, and there's a claim, and then Citizens finds out that they're doing Airbnb.
They have every right to deny that claim.
So it could be a problem. Mm-hmm. I think a lot of people, I didn't know that. I think a lot of people probably don't know that.
A lot of people don't know that. And, sometimes when we're quoting people and they say, well, I got this quote. And I said, well, technically it's not eligible. We're not going to write that policy for you. And so maybe we lose some business, but at the end of the day, we want to make sure that we're doing it right.
Yeah, because it'd be nothing worse than there's some sort of claim and then they deny it and they're like, oh, well, we didn't know.
Yeah.
So.
Same thing as if you had a owner-occupied policy and you said, well, I'm just going to rent it out and go live in Orlando now.
Right.
And you don't tell anybody or change it.
Yep.
And there's a claim. The insurance company has every right to deny that claim.
Yeah, a lot of people, that happens a lot. Like we're seeing that a lot right now where people are converting their primaries into rentals and buying a new primary there because they don't necessarily want to sell their current house because they have a nice low interest rate mortgage on it, so they can get a nice cash flow on the rental, but they're not re-reviewing their insurance on their current home. They really need to switch that policy to like a rent loss policy.
Yeah, landlord.
And then you also have issues with clients right now where they're converting that property or they're putting the property in an LLC. So the property is now owned in LLC, but they have an insurance policy in their personal name. Technically,
there's no coverage.
So technically, there's no coverage if that's the case.
Yeah.
Because you're insuring the person, but it was rented by an LLC and owned by an LLC.
Correct. So as the person, technically, you have no insurable interest. Now, there used to be some carriers that would write it in your name and then you could add the LLC as an additional insured. But those carriers either aren't writing policies anymore or they went out of business. And so right now, if it's in an LLC, chances are it's going to be a Citizens policy.
So Citizens will close an LLC.
They will. Yeah. However, there's no liability.
Zero
Not liability. They will not offer liability on a home that's owned in an LLC. So you have to get a separate policy for that.
Separate liability or an umbrella of some sort.
Yeah, and that's probably an extra $400 to $500 for one of those.
Gotcha. Interesting. Wow. All right. So back on the Citizens reforms. Let's talk about that 20% rule. So the 20% rule of if you can get another policy within 20% of Citizens, you have to take the other policy.
Correct. So Citizens has what's called their clearinghouse. So when we run a quote, we run it through their clearinghouse. And what it does, it's kind of like a rating system. And it rates against a handful of carriers that Citizens kind of has contracts with. And so if one of those carriers returns a quote that is less than 20% than what Citizens would offer, then you have to go with that carrier. Citizens won't offer that coverage.
Gotcha. And you mentioned that that's how it was before, but at 15% or similar?
Yeah, it's similar as far as, there's eligibility requirements to go with Citizens. And typically if there's a carrier that's going to offer coverage for you within that 20%, then you've got to go with it. So you have to actually provide Citizens with documentation that they're not eligible for any other company.
Gotcha. So do you think they'll be there? Like, let's just say there's a carrier that is within that 20% rule, but as an agency owner, you don't write with that carrier. Like how would that work?
So again, if it's Citizens Clearinghouse, if just by being appointed with Citizens, you have access to whatever that company came back. So most people who have Citizens are able to write with that company.
Gotcha. Okay. So really, they want to incentivize people to use the private markets.
Right. I mean, Citizens wasn't created to be the largest policyholder in the state of Florida, right, which they are. Yeah. I think I did kind of a look back to either July of 2019 or July of 2020, and then to July of this year. And I had in my 10 years of being in business, I had 250 Citizens policies on my books back then. Mm-hmm. Now I have 1,500.
Wow.
And it's not like, we've, written 10,000 with the other carriers. No, it's just primarily going to Citizens, and they're becoming the insurer of first resort as opposed to last resort, just because even if another company comes back, Citizens is $1,000 cheaper just because, their rates are pretty much subsidized. Right.
And then what about the other provision now requiring flood insurance?
Yeah. So with Citizens, they're going to require, if you're in a high risk flood zone, that you have flood insurance, which it's not going to affect that many people, because if you have a mortgage and you're in a high risk flood zone, you have to have flood insurance anyway. So it's going to be for the people that have paid off their home, bought their house cash, and they're with Citizens and they're in a high risk flood zone and they've elected to not get flood insurance. They're rolling it out it's not like tomorrow you've got to get flood insurance. They're rolling it out in phases over the years, but they're going to require you to provide proof of a flood insurance policy.
So if you're in a flood zone, you have to get flood insurance.
Correct.
Yeah, it's not that big a deal anyway.
You should want it anyway,
Yeah.
And definitely. Right now, even if you're in a high risk flood zone, you have to sign a waiver with Citizens that says something about flood anyway. So, but most of the time, everybody has a mortgage, so I don't think it's going to affect it too bad.
That's good. Yeah, I know there's some misinformation out there where people thought regardless if you're in a flood zone or not, you would have to get a flood policy.
Technically everything's a flood zone. It's just flood zone X, B, those are all low risk. It's when you get into the A's, the AEs, right, those type of flood zones, those are considered the high risk. So people in those areas would have to get it.
And those are if you have a mortgage, then you have to get those anyway. We would require it.
Yeah.
And flood insurance, that's also subsidized, but that's subsidized by the federal government.
Correct. That's through FEMA. But there are private carriers offering flood insurance. That's kind of become a little bit more prevalent over the last, 5-6 years. We've had some private carriers offering flood, and those are like Lloyd's of London. It's underwritten by Lloyd's of London.
Why would you go with a private flood policy versus FEMA?
So with FEMA, the most flood insurance that you can buy, you can buy excess as well, but the most that you can buy is $250,000. So if your dwelling coverage is $500,000, the most you can buy is $250,000, and that satisfies the lending requirement because that's all you can buy. And also, it's just kind of you get dwelling coverage to insure the structure, and then you can buy X amount of personal property coverage, and that's really it that comes on it. And the personal properties I've always covered at actual cash value, so it's depreciated. With the private carriers, you can insure it up to whatever dwelling amount you want. I mean, as long as you if you have a $400,000 insured home, you can't insure it for $1 million, but you can at least buy up to whatever your current homeowner's dwelling coverage is. You can add replacement costs to the personal property. You can add, what's called loss of use. So if the home was damaged by a flood and you couldn't live there, there's money for you to go live somewhere else. Like right now on a FEMA policy or a standard government issued policy, those coverages aren't available. So there's a lot more coverages, and oftentimes it's cheaper too. So
if you have a $10 million house on the ocean, you're going to have to go with a private policy.
Correct. Yeah. I mean, you don't have to. You can get the $250,000 and satisfy your lending requirements, but if you want to make sure it's covered properly, then yes.
Exactly. Cool. Anything else that was in the bill that we should touch on? I know we touched on most of the main points.
I mean, I think that's pretty much it. The biggest things are going to be that one-way attorney's fees and the assignment of benefits.
And it's really just yet to be seen on how much impact this has for our community.
Right. I don't think next year you'll see the roofclaims.com bowl game. Hopefully, anyway.
Hopefully not. Man, well, this is a super boring topic, but I'm glad we covered it. I think it's important. It's there's a lot of talk about it. I mean, every day we're dealing with this as a lender. And I know homeowners, it's one of those things that stresses them out because they're getting canceled. They get canceled. They call us. We get them back with you. We try to get the policy rewritten. We work with them on helping them get in their home the mitigation credits or the third nail or the roof retrofit. So it's a sensitive topic. It affects everybody in the state of Florida. It affects their pocketbooks, their monthly payments on their mortgage if they're escrowed. So hopefully this makes at least a decent impact, and I guess it's yet to be seen. But
yeah.
Well, I want to thank you for joining me today, Ross. And again, thank you so much for your partnership over the years. You're an awesome guy, a great agent. So if anybody wants information on Ross, or you want to have Ross take a look at your policy, we'll put his information below, and link to your webpage. Give him a call. He's a good dude, good family man. Oh, and tell me a little bit about that the Crossing for the Cure that you're passionate about.
Yeah. So there's something called Crossing. It used to be called Crossing for the Cure, but now it's called Crossing for Cystic Fibrosis, and it's a 80-mile paddle from Bimini, Bahamas, back to Lake Worth. You do it in one night, basically. It starts at midnight, and then you arrive back at the beach in the afternoon the next day, and it raises a ton of money for cystic fibrosis. I actually had a friend in high school that was affected by it. He ended up passing away 2 years after we graduated. And so it's always something that's I've always been aware of, anything cystic fibrosis related, because it's not very common.
Yeah.
So anytime I would see it, it would just, flash at me. And, this event, I was always aware of it, but I almost kind of became aware of it every year a little too late to actually do it. And so last year, I was picking up my race packet for the Palm Beach Half Marathon, and they had a booth there. And so right there, I signed up, and I was like, all right, perfect. This is plenty of time. And that was in December of last year. I started kind of paddling, getting ready for it, probably February of March of this year. And, went out in June, went over to the Bahamas, got on my board, paddled back, ended up getting third place. So it's a really cool event. You can do it as a team. So if you say, I can't paddle 80 miles, you can do it as, 4-person relay team where everybody gets in and, paddles a little bit. So it's a great event. It's really fun. It's really cool to do. And if you're interested in kind of a big adventure, I encourage you to sign up for it.
So you paddled for how long?
It was 15, about 15 and a half. Yeah.
Nice.
Yeah.
Yeah, what a great adventure, but more importantly, just a great cause. So we'll put that information below as well.
Yeah.
If anyone wants to check it out, you can get involved, either do it yourself or you can sponsor paddleboarders.
Yeah, absolutely. Well. And, one of the things that they look for is, because if you just sign up as recreational, hey, I just want to do this, the Crossing for Cystic Fibrosis will supply you a boat captain. So you don't have to find a captain, and you'll paddle with like 4 or 5 other people. I did it as a competitive solo, so I had to actually find my own boat captain, which was really tough. But if you're just a boater, you've got a twin engine boat and you want to give back, you can volunteer just to, escort people back.
Nice.
So you don't have to pay, you don't have to donate any funds. You can just donate your time.
Awesome. Well, that's good stuff. Merry Christmas, Ross.
Merry Christmas. Happy New Year.
Happy New Year. Thank you so much.
Thank you.